There is something strange happening in real estate right now. The world's wealthiest investors are quietly buying up a type of property that most people barely even notice. I'm talking about mobile home parks. And no, we're not talking about some small time landlord collecting rent from a handful of trailers. By the end of this video, you'll understand exactly why billionaires are allocating serious capital to this asset class. And more importantly, you'll see what they see and why the rest of the market is finally catching on. So grab a drink, get comfortable, and let's dive in. Here's the reality that most investors miss. When you buy a single family home, you're competing against millions of other buyers. When you buy an apartment building, you're competing against institutional funds with billions in deployment power. But mobile home parks, that market is different. Let me give you the first reason billionaires love them. And this one might surprise you. Mobile home parks offer something virtually no other real estate asset can match: pricing power without new construction. In a traditional apartment complex, if you want to raise rents, your tenants can simply move down the street to another building. Competition keeps prices in check. But in a mobile home park, residents own their homes. Moving is expensive. We're talking $4,000 to $8,000 in moving costs alone. So when a park raises lot rent by $50 a month, most residents just absorb it. They can't afford to pack up their house and move it somewhere else. That's called pricing power, and it's one of the most valuable things in real estate investing. Here's the number that tells the whole story. National mobile home park vacancy rates hover around 2 to 5%. Compare that to conventional apartments, which regularly see vacancy rates of 8 to 15%. In some markets, apartment vacancy spikes above 20% during economic downturns. That consistent occupancy translates directly into consistent cash flow, which is exactly what sophisticated investors crave. Now, here's where it gets really interesting. Warren Buffett entered this space in a big way. His company Berkshire Hathaway acquired Clayton Homes. Clayton is the largest builder of manufactured homes in America, and through their financing division, they also hold billions in mobile home loans. Buffett didn't do that because he liked the aesthetic of trailers. He did it because the numbers work. When one of the world's richest men sees an opportunity, smart money pays attention. But Buffett isn't alone. Sam Zell, the billionaire founder of Equity Group Investments, built an empire by recognizing value where others weren't looking. He became one of the largest mobile home park owners in the country. And in recent years, even Elon Musk made headlines when SpaceX acquired 4 mobile home parks near its Texas launch facilities. Do you think that's an accident? Companies like SpaceX and Tesla don't make casual real estate moves. They acquire assets that solve operational problems while generating returns. Mobile home parks check both boxes. So that's the first piece of the puzzle: pricing power and rock solid occupancy. But here's the second reason billionaires gravitate toward this space, and it's something most real estate investors completely overlook. The supply of mobile home parks is shrinking, not growing. Think about what that means. When apartment developers see high rents, they build more apartments. Supply increases, competition intensifies, and rents eventually stabilize or drop. That's basic economics. But mobile home parks are different. The barrier to entry for new parks is enormous: zoning laws, environmental regulations, infrastructure requirements. The red tape alone can take years to navigate and cost millions to satisfy. Meanwhile, existing parks are disappearing. Some are being converted to other uses. Others are simply being abandoned as owners age out and nobody steps in to maintain them. The MDC Holdings, formerly known as Meritage, tracks this data. They've reported that America loses roughly 50 to 70,000 mobile home park lots per decade to closure or conversion. Let that sink in. Demand for affordable housing is growing, and the supply of mobile home park lots is actively shrinking. That's a supply-demand dynamic that smart investors salivate over. And here's the thing: you're not competing against Goldman Sachs for these deals. Most institutional investors still look right past mobile home parks. They're focused on gleaming high rises and luxury apartment complexes. That leaves room for smaller players, well capitalized individuals, and private equity groups to acquire parks at attractive valuations before the institutional money floods in. If you're finding this helpful so far, hit that subscribe button. I put out videos like this every week, breaking down the investment strategies that built real wealth for people who actually executed them. Stick around. The best one is coming up next. Okay, now for the reason this might actually change how you think about real estate entirely. Mobile home parks perform brilliantly during recessions. When the economy tanks, people don't stop needing affordable housing. They actually need it more. Think about it. When unemployment spikes, when the stock market crashes, when consumer confidence collapses, where do people go? They can't afford to buy homes. Renting a traditional apartment might eat up half their unemployment check. But a mobile home, lot rent of $300 to $500 a month, that becomes achievable. Demand for mobile home park living actually increases during economic downturns. It's countercyclical by nature. The data backs this up. During the 2008 financial crisis, when apartment vacancy rates soared and rent collection plummeted across the board, mobile home parks maintained occupancy rates that would make any apartment investor jealous. During the COVID recession in 2020, manufactured housing communities again proved resilient. Investors who owned mobile home parks didn't skip a beat. The rent kept coming in because the people living there had nowhere else affordable to go. Here's a name you might not expect to see in this conversation. Mark Cuban, the billionaire owner of the Dallas Mavericks, has publicly stated that manufactured housing represents one of the best opportunities for wealth building in America today. He didn't say that because he's running a charity. He said it because the math makes sense. Low acquisition costs, high occupancy, recession resistance, and a growing population of buyers who simply can't afford traditional housing. That's a winning combination. And here's the third piece that really ties it together: the tax advantages. Mobile home parks, like most real estate, offer depreciation benefits that reduce taxable income. But beyond standard depreciation, many parks qualify for accelerated cost recovery and bonus depreciation under current tax law. When you combine depreciation benefits with the ability to finance a large portion of the acquisition through conventional lending or seller financing, your actual cash out of pocket can be surprisingly low compared to the income the asset generates. We're talking about yields that can exceed 8 to 12% on the actual cash invested, not just the total asset value. But I want to be clear about something here. This isn't a get-rich-quick scheme. Every investment has risks. Mobile home parks require active management. You deal with utility systems, infrastructure repairs, tenant relations, and local regulatory bodies. Some parks have environmental issues from old underground storage tanks. Others have deferred maintenance that will drain your capital reserves if you're not careful. The point isn't that mobile home parks are perfect. The point is that billionaires see past the stigma and look at the economics. And the economics are compelling. So let's bring this all together. Pricing power because moving is expensive. Supply constraints because new development is nearly impossible. Countercyclical demand because affordable housing is always needed. And tax advantages that compound returns over time. That's why the smart money pays attention. That's why Buffett built a manufactured housing empire. That's why Sam Zell made it a cornerstone of Equity Group. That's why even tech billionaires are quietly acquiring parks near their operations. The question isn't whether mobile home parks are a legitimate asset class. The data has answered that. The question is whether you're paying attention to what the billionaires are paying attention to. Because right now, there's still a window. The institutional money is starting to arrive, but it's not here yet. Opportunities still exist for investors who move deliberately and do their homework. If this video gave you something useful, share it with someone who's looking for alternative ways to build wealth. Hit like if it resonated. Subscribe if you want more videos breaking down how the wealthiest investors actually think. I've got more strategies coming that will challenge the way you look at real estate. See you in the next one.